Hi, I'm Scott Shuttleworth from Montgomery Investment Management and welcome to this week's video insight. Today I thought it'd be a good opportunity to run through our investment decisions on Vocus over the last year or so. Now I'll start by noting that none of what we're about to discuss should be constituted as an investment recommendation. If you have shares in Vocus, you'll need to arrive at your own decision as to what you do with those shares, and this video shouldn't be based, that decision should be based on this very brief video. Now, backtrack to before the merger with M2 when Vocus had just acquired Amcom. There were a few things that struck us at the time. The first was that combining Amcom and Vocus would result in a fourth national telecommunications carrier. The entity would have a broader suite of products that it could offer to customers and thus compete against the likes of Telstra and Optus. The second was that implicit in the carrier was a national fibre network with plenty of dark fibre yet to be utilised. Dark fibre can be offered to corporate customers to provide them with very fast Ethernet connections. The value proposition of this fibre at the time was pretty good, i.e. Vocus could give a customer a Telstra-like service but for a fraction of the price. The third thing that we noted was that the combined entities would have a rather large sales force, several times larger than what Vocus had previously. So by combining points 2 and 3, we could see Vocus sustaining its run rate in organic customer acquisitions onto the dark fibre network for quite some time. Now the real kicker for earnings was that the incremental margins that could be earned on the dark fibre were up to 90% in some cases. This means that we only required a moderate increase in revenue and a large increase in earnings would be the result. With the shares trading at circa $6, it was not a hard decision to buy the stock. Now walk forward several months. Vocus had merged with M2. Now Vocus was a corporate provider of telecommunications services, whereas M2 is more retail and is considerably larger. As such, the earnings base of the merged entity swung towards a more retail bias, and its relevant drivers of retail came into play. Now, with the shares trading at over $9 at this time, a decent clip to where we believed that fair value existed, and much closer to our upside case, we began to trim our position. Note that nothing particular had gone wrong with the investment thesis. We simply made a call with respect to our potential upside and downside. As always, our preference is to protect investors' capital and then focus on returns, and that's what occurred here. However, we are beginning to note that the future case for the consumer broadband market may not be so clear-cut. Recently, we've noted Woolworths considering plans to enter the NBN market, and we've seen research which demonstrates the ability of wireless providers to potentially disintermediate NBN services in the future. These latter issues make the firm, i.e. Vocus, more difficult to model because we're not as sure about how the future will work out. Again, capital preservation is key here. Nonetheless, we still hold TPG, and it will likely not be our last investment in the telecommunications sector. That's all for this week. Please follow us on Facebook and Twitter.